Hello, everyone, and welcome to our webinar today. Thank you very much for taking the time to join me. Today's going to be a really cool day because today we're going to talk about one of my favorite topics, money, and how you can get money for yourself, for your business, for your clients' businesses. So hopefully, I think for you, it's going to be very rewarding. The reason I wanted to do this webinar today is because for those of you that don't know me, I actually owned a credit repair business. And I actually sold that and made a good profit on it, in large part due to what business credit did for my business. But along the way, in the last year before I sold the business, I discovered financing. It's kind of funny because as a credit repair owner, I never thought that I could actually qualify for financing. And, then I got in touch, I got this business finance suite, and I realized how much financing I could actually get. And it's kind of ironic and funny because I did all the hard work, I built the business, struggled to build the business using the profits from the business to pay me and the payroll and grow the business. And then at the end, I finally found the solution of how to get money for the business. So what I'm hoping to do for all of you today is basically come in here and make it so you don't have to go through that large learning curve. You don't have to wait until you sell the business or get to the end of the business to actually find out how to get money. Because let's be real, if you have money to grow a business, it's a much easier path. That's why almost all Fortune 500 companies use many types of financing you're going to see here today. They don't use it because they need it. They're Fortune 500 companies. They use it because they understand leverage. They understand how to get money to help build their business, to use as leverage to help grow their business. The bottom line is, if you can get loans, if you can get credit lines, if you can get financing from other sources, then that means that you have more money to promote and grow your business, and you have more working capital to deal with the day-to-day surprises that come with every business. So today, that's what we're going to dive into. We're going to talk about 16 types of business credit financing that's available for your business right now. Actually, we're probably going to talk a little bit more than 16, but I'll be conservative and just say we're going to go over 16. Now, I didn't include my normal slide with my picture in my book, but I will introduce myself. If you haven't been on one of my webinars before, my name is Ty Crandall. I'm actually the Director of Business Credit Services here at CreditSuite. My role is very simple. What I help people do is sell business credit. It's as simple as that. I help clients go out and offer business credit to their customers and turn it into a profit center for their business. So that's what my role is here, and if I can ever help any of you in that, please let me know. So let's dive right in. Let's talk today about discovering 16 types of business credit financing that's available right now for your business. Okay, so let's first talk about revolving credit accounts. Most major merchants offer business credit for you to apply for. You can get approved at Staples, Home Depot, Office Depot, Lowe's, BP, Walmart, Costco. You can even get approved for credit limits of $10,000 or more. So this is important to know because, quite honestly, people don't know this. People don't know that you could walk into Walmart or Costco or Sam's Club or BP or Staples or Office Depot or Chevron or Speedway, and that you could get a credit card for your business that has no liability from you. Most people don't know that, but it's absolutely available. So it's one of the first, easiest, and best things that you could look at to get money for your business because, for example, I was in credit repair. And we had a lot of paper. We bought a lot of office supplies. I mean, we spent massive amounts of money at Staples. So to have the ability to have a business credit card with Staples that has no liability provided a massive benefit to our company. And most of the credit cards at places that you typically use are available in your business name. And a lot of these can be done with no personal credit check or no personal guarantee. You can even get Visas, MasterCards, and American Expresses with this kind of business credit. Now, again, what I'm talking about in this type of funding is actual business credit. So you're talking about credit here that's obtained in a business name, okay? And with business credit, the business itself builds its own credit profile and score, and then once that credit profile and score is established, the business then starts qualifying for credit. Okay, now again, it's credit in the business name. It's based on the business's ability to pay the bills. It has nothing to do with personal credit. Okay, so this is a really cool financial product to look at because it's independent of personal credit. So that could help you if you have any kind of credit issues, but especially it helped your clients. In credit repair, obviously, I had a lot of clients that had credit issues. So to be able to produce to them a solution, a financial solution that they could do regardless of how bad their personal credit was a massive benefit. So that's one of the biggest benefits of business credits is based on the business owner's ability or the business's ability to pay, not the business owner. Okay, and since the business qualifies for the credit in some cases, in a lot of cases, there's no credit check for the business owner at all. Okay, now another option be in the credit card arena that we're talking about is something called unsecured credit cards and credit lines. Okay, now this is a little bit different than business credit. Even though business credit's unsecured, I guess, I just needed a name to call this second product here. But what this is this is credit cards that are available to you even if your business credit isn't built. Okay, a lot of people don't realize that you can go out and get massive amounts of credit in credit cards and credit lines even as a startup business. Okay, so unsecured credit cards are perfect for a startup business or franchise because they don't have to provide financials. It's not just great for a startup business. Any business that doesn't want to show financials, unsecured credit cards and credit lines are phenomenal solutions for. Okay, because if you go into a bank pretty much offers 2 SBA loans. And those SBA loans are full doc, which means if you haven't been in business 3 years with positive financials and perfect credit and blah, 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 you aren't going to get a loan. With unsecured business credit cards and credit lines, you can get approved. Okay, even if you're a startup business, startup franchise, a company that has no financials, and you can get up to $150,000 based only on your personal credit. Kind of funny, all right? The exact opposite, I guess, of what we just looked at before. We just looked at business credit, which is independent of personal credit. They don't even look at the personal credit report. For unsecured credit, you can also get approved based only on your personal credit scores and personal credit profile. And based on the strength of that credit profile and score, somebody can get approved for $150,000 even if they're a brand new startup business. Okay, and the best part is this program is as close to no doc funding as you can truly get. Okay, that's hard to get in the business world, something where it's just no doc. And these unsecured business credit cards and credit lines, that's exactly what they are. Plus, they report to the business credit reporting agencies. You're killing 2 birds with 1 stone here. We just talked about business credit and building business credit. Well, what's cool about unsecured credit is they report to your business credit report. So you're actually getting unsecured credit cards you could use for your business now, and those report to the business credit reporting agencies, helping you build your business credit in the process. So that makes it even easier for you to then get approved for business credit cards on top of these unsecured credit cards. Okay, and these approvals for these unsecured that we're talking about are based only on personal credit, which means no collateral or financials is typically needed to qualify. Pretty cool. Ladies and gentlemen, you walk into a conventional bank right now, they're going to want both. For an SBA loan, they require you have collateral and financials. With this program with unsecured, you don't need either. And there's no upfront application fees typically charged with these programs and fast approvals. I mean, you can secure these kind of unsecured credit cards and credit lines in less than a month, typically 2 to 4 weeks. Okay, and again, approval amounts go up to 150 grand. They start as low as 10 grand. Most of these are usually in increments of about $10,000. And the approval time is 2 to 3 weeks or less. Good personal credit's what's used. So let me tell you how these work. These are offered at a lot of different banks. Some of them you may know of, Bank of America, Chase, the big banks. Okay, some of them are smaller banks. What we do for our clients in the Business Finance Suite is we'll typically get them 5 to 10 of these credit cards. And the kind of limits that you could secure is 100% relative to the kind of limits that the person has on the credit report right now. So if they pull your personal credit report and they see you have a $10,000 credit limit, you're going to get about a $10,000 credit card. And through the Finance Suite, we get people about 5 to 10 of those. Now, we make it easy because they apply for one program, we get them 5 or 10. If you're not using the Finance Suite, that's fine. You just need to go out there and check with a lot of these sources and ask them what they have, because a lot of the big banks and even a lot of the smaller ones you might not have heard of offer these type of credit cards. Again, the limits will be equivalent to what you have now. You have $10,000 limit credit card on your credit report now. You could very well get 5 to 10 of those kind of credit cards, $50,000, $100,000 through different banks. Okay, so really, really, really powerful stuff. Plus, another thing about these programs that I didn't mention in the slides is you can also use credit partners for these programs. So if your credit or your client's credit's bad, but they have somebody that has good credit that wants to be a good credit partner or a guarantor, they could sign and get that money. Or you and a actual credit partner could both apply and get twice as much money. So it's very practical. It's for somebody to get 100 to 150 grand. It's just a matter of the kind of credit limits you have now. Do you have a credit partner? Those type of things. Okay, that will ultimately determine how much you're approved for. Now, there is a full doc option also. You could actually get up to $250,000 on a similar program through SBA, but that is with financials. So if you have positive financials that show good net profits, you could go away from the no doc program, go to a full doc financials program, and could get a working capital credit line, a single credit line for up to $250,000. So a very, very good option if you do have financials and you want to go through SBA. If you don't and just have good personal credit, don't want to show the financials, then the no doc option by far is the best. So to qualify, no unpaid collections, no BKs, no lates in the last 12 months, low inquiries, less than 3 in the last 6 months. Inquiries on these programs are a pretty big deal. They're a real big deal. Okay, they're going to look at inquiries. They want to make sure you're not going out and applying at a bunch of other places. Why? It's simple. They wouldn't know if you were, because these items don't report on your personal credit report, which is brilliant because they don't affect your personal credit score, your availability of credit. That's 30% of your consumer score. So leaving these accounts off your personal credit is of substantial help to your personal credit. The other benefit is that when you go to apply for financing, they don't know you got credit other places because it reports to the business credit reporting agencies. All they're looking at is the amount of inquiries you have. So with this program, it's really important that those inquiries stay as few as possible, less than 3. And banks are typically going to want 680 credit scores or higher. Again, the big thing they're looking at is credit cards. You know, they need to make sure that you have higher limit credit cards now to get approved. So if you have $3,000, $5,000 limit credit cards, you're probably going to be able to get approved. And again, expect that you're going to get approved for at least, you know, for a pretty equivalent card to the limits that you have now. You can get multiple of those cards at multiple different institutions. You also need to keep the ratios low. So you really should have balances below 50% of the limits on those credit cards that you have on your personal credit profile to get approved for this program. They look at those two things pretty heavily. Then they're just going to basically look at your 411 listing and personal credit. And the credit lines come with check writing capability, and we already talked about how you could add credit partners and get approved for even more money. So equipment financing and leasing. Well, over 80% of U.S. businesses use equipment leasing to acquire equipment for their businesses. I didn't know that. I didn't realize how big equipment financing was. Now that I'm in the chair I'm in now, I know how big it is because I see how many of our clients come through and get equipment leasing, equipment lease back, equipment financing. So I see how popular it is. But 8 out of 10 people that get equipment use the equipment leasing. It can be used even for office equipment or large commercial equipment used for manufacturing. And I mention that because you don't think about that, right? You don't think about getting financing for a copy machine, but you can. Okay, you could get equipment leasing on all types of equipment, small and large. So even if you're not somebody that's in the construction industry or whatever it may be where you have heavy equipment, you could still come in and get equipment financing and leasing even for small office equipment. And it can be used for a startup business. This is another thing that's really brilliant and great to know, right? Find it out as I'm selling my business. Would have kind of been nice to know when I actually built the business that you could come in even as a brand new business owner with average credit 650 type scores and get equipment leasing, get equipment financing. So if you need to buy equipment to make your business run, even as a startup business, you can get money for equipment financing. You don't need to be in business years. You can also get $10,000 to $2 million with heavy equipment financing. And they even work with challenge personal credit. So you can receive a lump sum of equipment or a lump sum of cash with equipment sales leaseback too, which is another really, really popular kind of financing. And we're probably going to talk about that in a minute on another slide. But let me maybe even mention what that is. What sales leaseback is brilliant. That's what it is. It's brilliant. Okay, there's a few different types of equipment financing you're probably going to be exposed to. Equipment financing, heavy equipment financing, equipment leasing, which is kind of like equipment financing, but better terms. At least seems to work out with a little bit of better terms than the normal financing. And then there's this thing you'll hear called sales leaseback. So what a sale leaseback quite simply is that, let's say you own this dozer down here at the bottom. Okay, so if you own this free and clear, then you could actually get a sale leaseback on that equipment to borrow against it. So if you have equipment that so you can get equipment financing and leasing to buy equipment, you can also get sales leaseback to borrow against equipment you already own. This is brilliant because even people that have challenged credit could use a piece of equipment they already own as collateral to get money. And the reason they call it a sale leaseback is because inevitably you're basically selling it to them and then they're leasing the equipment back to you. That's how it really works. You're basically going to lease the equipment back from them. They're just going to give you a lump sum of cash for that equipment, and then you're going to basically lease it back to them and make monthly payments. Okay, that's brilliant for a lot of different reasons because you can also write off the interest. So now you've got an equipment that you have, even with challenged credit, you could use it as collateral, get money against it, okay, and then you could then, in making payments to pay that back, you have something that's tax deductible, which makes it even more feasible. Construction equipment, farming, paving, trailers, mining, manufacturing, any of that works for what they call heavy equipment. Okay, now equipment financing and leasing are perfect for a business owner who wants to borrow money to get equipment. Okay, and then clients can use this financing. So they can also get financing to leverage existing equipment they already own to qualify. That's the sale leaseback that we just talked about. Okay, and heavy equipment financing is usually available for most industries and most type of equipment. I mentioned some of them. I expand here. Construction, farming, logging, forestry, trucks, trailers. Trucks and trailers are big, right? Because you might think that's a special kind of financing, but it's actually an equipment financing. And what I'm talking about here is I'm talking about 18-wheelers. I'm talking about big semi-trucks. Those even can be financed through equipment financing. Mining equipment, paving equipment, agricultural equipment, machine tools, manufacturing. It's good to see these listed because it helps you mentally think of niches. It helps you think of people that you could approach to offer this type of service to if you do have access to business credit financing to offer. So some industries that will actually work really well with the heavy equipment financing. Again, many other business owners use this type of funding to lease equipment and gain tax advantages without using the out-of-pocket money to purchase the equipment. And it's a great funding program for a client who has or wants equipment and has average or above credit, because that's all it takes. You have average or above credit, you're going to be able to get equipment financing, equipment leasing. If you own equipment free and clear, you're going to be able to get a lump sum of cash from the actual equipment sales leaseback. So some really, really powerful options with equipment financing. Another couple types of niche financing that we offer through the Finance Suite that most people don't even think about that you can get, I'm going to talk about two. And one of those is vehicle wrap financing. This is our most popular program. It blows my mind that vehicle wrap financing is the most popular program that our clients go for. But it is. 70% of our clients, on top of getting other funding, go for this program. It's huge. It's big. It's popular. Okay, and with this program, what happens is somebody gets approved for financing to wrap their vehicle. Okay, you probably know what I'm talking about, right? You see the car riding down the road with, ABC Construction on the side, a graphic wrap. Some places even do it with windows. Okay, we've got clients that have done a whole corner front window that they lease of a building, and they wrap the whole corner window or wrap the front windows. I got a client that owns a pizzeria, and I sold the Finance Suite to him when I very first got started offering it, and he wrapped his whole vehicle, or he wrapped his whole window with big images of pizzas and stuff like that. So that's what wrap financing is. And even though I say vehicle wrap financing, you could wrap a vehicle. Like I said, you could even wrap buildings. So financing is available for all types of vehicle wraps, including standard and illuminated. You get approved, you gain exposure, you have a competitive edge. So some really cool things about wrap financing. You can get loans up to 50 grand too. Plus, you get the tax advantages. Plus, you get to gain exposure without a large out-of-pocket expense. Ladies and gentlemen, these wraps are $2,500 to 50 grand. The new wraps nowadays that are 5 to 10 grand have those graphic wraps that you're used to seeing, but they have embedded LED lights. They are bad to the bone, man. You see those things driving at night. They're awesome. So all those type of actual wraps we handle, or somebody can get wrap financing from. And usually those wraps are 2,500 to 50 grand or more. So a lot of money can be made. And people can even get approved in 72 hours and get wraps for multiple vehicles, which makes it really, really nice. Kind of on the side of that, you can also get commercial signage financing. Wrap financing and commercial signage financing isn't really difficult to qualify for. You can get financing for all types of signs: monument, pylon, pole, neon, channel letter signs, gain critical exposure visibility. Look, the nice thing is this. This is what we find. Clients want financing. Okay, great. What do you want the money for? Well, some people want it for equipment. They want it for signage. They want it for advertising. So what's nice about these type of niche products is somebody can get financing exactly for what they want, a small niche. They don't just need to get a general loan type of actual financing. Okay, so this is something really specific for somebody that actually probably wants to put up a commercial sign, which obviously in itself could bring a massive amount of revenue to that business. Securities-based line of credit. I love this. Securities-based line of credit provides you with an outstanding way to leverage assets that are currently in stocks and securities for your business. Okay, so let's say you have stocks. Let's say you have bonds. Okay, what securities-based line of credit will let you do is borrow against those stocks or bonds to actually get an open-ended line of credit that you could use for your business. You get approved in less than 72 hours, and you can get as high as 90% of the value of the securities. Really powerful stuff. Okay. On top of that, you can also get a revolving line of credit issued. This is a revolving line of credit that's issued against those stocks. The interest rate's only as low as 1.6% interest only. Let me tell you why this is huge. You won't see this anywhere else on anything else, period. This is probably the best, lowest interest rate type of financing that's available out there today. And I can tell you through the Finance Suite, we have over 30 products. We deal with over 2,000 lenders, okay? So when I tell you that this is probably the lowest interest rate you're going to find on any program anywhere, that's a big deal, because that applies to most programs that exist for business financing. So 1.6% interest only. Somebody can get a loan to value of 70-90% of their stocks or securities. Limited documentation. They basically just show the documentation for their securities and they're done. And most major stocks, mutual funds, treasury notes, T-bills are accepted. Let me give you an example here. I had a client the other day, couldn't get money anywhere, right? And we're talking to the guy's got $750,000 in stocks and securities through his retirement fund when he was a police officer. And he's earning 4% return on that consistently. So this was a no-brainer for him. He came in, he wanted $100,000, right? He wanted $100,000 is what the guy actually wanted in financing, and yet he walks away qualifying for $525,000. I mean, it's awesome, right? The guy wants 100, he gets a $500,000 open-ended credit line at 1.6%. So it's basically less than half, almost a third of what he's getting in return, and he still gets to keep his stocks. He still gets to keep the interest. He still gets to keep, everything that's associated with it. All that happens is if he were to default, then they would take the stocks. It's as simple as that. But any interest that's gained, the value, he can even trade the stocks for value, equivalent value stocks during the time he's getting the financing. But now the guy's going to have an easy time building and running his bar because, he's getting over a $500,000 open-ended credit line when he was struggling to even get $100,000 from his bank. Ladies and gentlemen, that's the power of what's available with different finance products, right? A bank isn't going to do something like that. A bank isn't going to give this guy $500,000 for a pretty new business to start a bar. But yet, because the guy has securities, he could get that money at 1.6%, which is about a third of what he would pay even if he went through his bank and got an SBA loan. Okay, alongside of that is 401k paying financing. This is different but similar. Okay, this is an outstanding way to borrow against a 401k or IRA. Okay, it only takes about 3 weeks to actually close the deal, and what happens is, the person really ultimately gains more control over the performance of the retirement plan, okay, and their business working capital by doing this. Ultimately, think of it like this, and I'll show you the process, then we'll go through kind of a scenario. Step one, they form a C corporation. They have their own corporation. They have a business. Okay, their company, their business starts a 401k. They roll the money over from their existing 401k into their new 401k, and the new 401k plan invest right into the business. Now, we don't expect them to do this or know this. Okay, when they go through 401k financing, they have a specialist that helps them go through this. But the brilliance of 401k financing is this. Look, a lot of people are not happy with the return they're getting on their 401k. And what a 401k is ultimately doing is you're just investing in other companies, right? That's what you're basically doing. Well, with this, what's happening is you're not investing in your own other companies, you're investing in your own. So it makes a lot of sense for a lot of people, because if their 401k isn't performing and they know their business is going to perform at a much, much greater pace than they'll ever earn in interest on their 401k, now they can use their 401k, basically buy the stock or basically invest it into their actual corporation, and now they can actually control their working capital. Okay, they have more money and they're in direct control of basically the return they get on that investment. So it's really as simple as that. 401k financing is really brilliant because a lot of people don't like the return on their 401k. Now they can invest that money into their own company. And if you have brothers, partners, people that want to contribute money to a company, they can all do this. So you can have people contribute money from their retirement plans right into the business, which makes a ton of sense also. Okay, merchant credit. Merchant programs provide multiple options to secure money for businesses, okay, including merchant advances and merchant credit lines. Okay, so if you accept credit cards now or would like to, merchant credit, card credit, merchant advances, these might be a perfect fit. Okay, you can actually secure up to $250,000, $250,000 in merchant card, in merchant advances. Now look, I'm just going to talk for the most part about merchant advances, okay? Because the truth is the merchant card, that's not out there. You're not going to find it. We have it, but not a lot of people do. This is the difference. Is a merchant advance is kind of like a loan. They give you the certain amount of money. With a line of credit, it's a line of credit. You can use it and pay as you go. So we do offer a merchant line of credit, which we call merchant credit, but you're not going to probably find that too many other places out there. That's a really rare niche product. What you will find a lot of are merchant advances, okay, where you can borrow against your future credit card sales. You can secure it even with bad personal credit. I say challenge, but I mean bad. Even 500 scores, you can get approved for these. And loans use past and current credit card history to determine financing, and a small portion of each future credit card sales goes towards repayment. A couple brilliant things here. First of all they're looking at to approve you is your credit card sales. If you have good credit card sales, and sometimes they look at your bank statements, if you have good credit card sales and you don't have a bunch of NSFs, you're probably going to get approved. Okay, beyond that, a small portion of each future credit card sale is taken for repayment, so it makes it nice and easy, meaning that they're not going to tell you have to pay them back $5,000 a month, and then all of a sudden you have a bad month and then you're in trouble. Well, with this, they take a percentage of each future credit card sale. So if this month you have a horrible month and your credit card sales are rock bottom, so will your repayment, which makes it cool. Your repayment terms will be variable based on how much money you're actually producing in the month. A big advantage of merchant advances. Also similar in merchant or business revenue lending. Okay, so unsecured business revenue lending is perfect for a business that has consistent revenue that's verifiable through bank statements. Okay, with revenue lending, you can secure money quickly for a business even if they have credit issues. Again, another program allowing people to get money down to a 500 score. And again, all they're looking at is your bank statements. Sometimes your merchant statements. It's awesome. They just want you to have consistent revenue coming through the business. If you have it, then you have a good chance of getting approved. Okay, now revenue financing is a loan to a company which is paid back through a royalty ultimately on the revenues. Real similar to the merchant advance, right? They take a percentage of your future revenue as repayment. Okay, and you can typically get funding up to 8% of a company's annual revenue. Okay, so you have to have at least $150,000 in revenue to qualify for these programs. And then if you talk about, let's say somebody has $100,000 in revenue a year, they can get up to about $8,000. Okay, let's say they have $200,000 in revenue, they're going to get up to about $16,000. So they're going to be able to get up to about 8% of their total annual revenue. And one big benefit is that it provides a variable payment, just like the merchant advance. The payment goes down if the revenue decreases in a month. Okay, plus all that's needed is a quick review of the bank statements, and somebody can get approved for as high as $150,000 with revenue lending. I see this called a lot of things. The other day I saw somebody call it a micro loan. So, it goes by a lot of different names. We call it revenue lending, but by far one of the easiest ways to get money. I mean, merchant advances are the easiest way to get money, but they're cash advances, so they're higher risk, higher terms. Revenue lending, the terms aren't as bad as revenue or as merchant advances. They're still easy to qualify even if a business has consistent revenue, right? So it's like the business doesn't have to have a ton of collateral or strengths. It just has revenue. It can get money with revenue financing, which is really powerful stuff. No longer need to wait weeks or months with account receivable financing. Okay, account receivable financing, somebody can get up to 80% of the receivables within 24 hours or less if they or for less money than if they accept credit cards from an actual customer. Okay, so this is where they're borrowing against an outstanding receivable, and they can get up to 80% of that receivable advanced to them within 24 hours. No background check, lender handles collections, not a loan. Okay, so had a guy the other day, and the guy, one of my clients had this customer, and this customer needed $100,000 to pay payroll, right? I mean, he couldn't even pay payroll. He needed $94,000 to pay payroll. Very precise on what he needed. And in talking to him, we found out that he had a $1.2 million purchase order outstanding for the city. Okay, meaning he was delivering the services to the city, but he's not due to be paid on that purchase order till September. I mean, it was kind of crazy. But something like that, in purchase order financing, somebody can come in with something like that and can get, up to 80% financing on that. So somebody can come in and literally get $960,000 advanced to him right away. This guy's struggling to pay payroll. He's trying to get $94,000 in his bank is turning him down. In an investigation, he's got this massive account receivable out there, this receivable that somebody can easily advance against, and now all of a sudden the guy gets $1 million. Okay, we've done financing as high as $25 million with account receivable financing. So there really is no limit to the loan amount if the person has the actual account receivables to get financing. Plus, it's not a loan. It's an advance against your receivables. So it doesn't show on the credit, doesn't affect debt ratios, any of those type of things. And the benefit here is the lenders actually handle the collections. Okay, now here's some terms. Up to 80%, the remaining of the 20% minus the fee is what they get paid when the invoice is paid. And typically they're going to pay 2.5% to 5% the first month, and then they'll pay as low as 1.3% after the first 30 days for each month that the money is outstanding. The bottom line is the payback on this ends up being about 2 to 3% in total interest, or if you're looking at it as interest that they would pay. That's stupid. Okay, I mean, they're getting 2 to 3% to get that money advanced to them. That's less than they would pay if they were accepting credit cards for the customer. Okay, and if you go to most of these business owners and say, hey, would you accept credit cards and pay 2% if you could get that money right now today versus waiting 3 months to get paid and not pay the 2%? And almost all business owners would say, look, I'd rather the company pay by credit card so I can get my money right away. So this is the brilliance of AR factoring. Okay, with AR factoring and financing, what ultimately happens is for about a rate of 2%, discount, they're actually getting this, up to 80% of their receivables advanced to them immediately versus have to wait sometimes 3-6 months to actually get paid. Okay, now typical industries here. I'm not going to list all or read all these, but basically the bottom line is any interesting that typically deals with receivables is a pretty good fit. Okay, now there are some other purchase order financing too, and with purchase order financing is a short-term financing option that provides capital to pay suppliers up front so the company doesn't have to deplete cash reserves. And a lot of these have to do with a work in progress or a letter of credit. So what happens is, you're an embroiderer, right? And you get a big order for t-shirts, and you have to buy the t-shirts from your supplier to embroider them. And this order is so big that you don't want to deplete your cash reserves to pay for all the t-shirts. So what you do is you get purchase order financing. We write a bill of sale to the actual t-shirt manufacturer. Okay, we let them know, look, you're going to get paid. We got the money in the escrow. Put the t-shirts on the boat. They put the t-shirts on the boat. The client actually gets the t-shirts to deliver on his order without paying any money out of pocket. Okay, and then he can go ahead, embroider the t-shirts, deliver the order, and get paid. So that's what purchase order financing really has to do with, is it's really designed to help somebody pay the actual cost of what that, or to actually cover the supplier or whatever they need to pay in supplies to actually produce that product for their client. Okay, now this includes import and export transactions as well as domestic, but a lot of this stuff nowadays is import-export. Inventory financing. Okay, it's a perfect way to get money for a business if they own more than 150 grand in inventory. With inventory financing, you can use inventory as collateral and quickly be approved even if they have credit problems. Plus, they can get generous payback terms and loan amounts, helping keep payments affordable. Okay, it's basically a bank line of credit secured by the company's inventory. Okay, so with inventory financing, the borrower receives a loan in order to purchase inventory or can borrow against inventory they already own. Okay, and then that inventory can be used as collateral against the loan. Very, very powerful. Talk to a client that owned a paint store. This was perfect for him. He needed money. His shelves are full of paint supplies, and he can't get money in his bank. So, on top of other financing, we also secured inventory financing for the guy, got the guy a bunch of money just borrowing against his existing inventory, using it as collateral. So he's got stuff sitting on his shelves, literally, you put your finger on it, just gathering dust. And now he's using that and turn around to get, $100,000 in money he could use to expand and grow the business. Very powerful stuff, inventory financing, if you're dealing with somebody that has actual inventory. Okay. We're to the two programs that banks offer. This will be a short slide. You got two slides here. This is what you're going to get at a bank. Pay attention. These are the only two programs you're probably going to get at a bank. Okay, so you can be approved for as much as $12 million in financing with low interest rates, generous paybacks through SBA. Okay, secured SBA loans are perfect for a business looking to expand or for the purchase of a new business or franchise, commercial real estate, partner buyouts. Look, here's the bottom line. SBA 7A and 504s are what you're going to get at a bank. Banks pretty much don't want to lend their own money, so they want to go with something where it's guaranteed by SBA, where SBA is basically guaranteeing 70-75% of the actual loan. So if you go into a bank, this is what they're going to offer you. They're going to offer you SBA financing. And what they're typically going to offer you is a 7A or a 504. Both have completely different purposes. One has the purpose of buying commercial real estate. Pretty simple. You're an existing business, you own it, you want to expand, you want to buy real estate, that's what the loan's for. Okay, the other 7A has to do more with, partner buyouts, buying an existing company. You can get 7As for working capital also. Okay, so, those are the two programs you're going to get at a bank, and the problem with that is they're very specific programs. One has to do if you're buying real estate. One has to do if you're buying out a partner or buying a new business. That's about it. You can get some working capital through these loans, but it's very difficult to qualify, not much, so they're not as perfect. But again, some of these are the perfect reasons on why you get these kind of SBA loans. You can get loans up to $12 million. And again, micro loans are available and very popular, which are just types of these loans which are smaller, and these do require income docs. They're full financials. Okay, this is why people can't get money at banks right now. If you've ever looked at SBA loans, look, they're very difficult to qualify for. We offer them through the finance suite, and I've never seen one done before because clients don't want them. I mean, when clients see the 5 pages of documentation that's required, most people don't go for them, and most people wouldn't qualify even if they did actually go for them anyways. So that being said, it's good to go over this, though, because you need to know the type of financing that you're actually going to see offered to a bank, and this is pretty much it. Okay, so private equity financing is a great option for a business to secure financing in many different areas: expansion, acquisition, increase, capacity, acquire another company, raise additional debt and/or equity to leverage for success of a company. Look, private equity financing is available at a lot of different places, and it all comes down to relationships. Through the Business Finance Suite, we have a ton of relationships with private investors. But even outside of our system, there's obviously multitudes of investors out there looking to invest, and these people offer all types of private equity financing. And again, they want to offer financing for expansion, for buying a business, for for growing with real estate, with those type of things. Private equity financing, you're usually not going to get for small amounts. Typically they want $500,000 plus type of approvals to probably get in there and get approved. But again, with private equity financing is a great way to go if you can't get institutional money or money through another financing source. Because if you have an investor and you've got, everything that makes the looks of a good investment, sometimes private investors are just easier to get money from than institutions that have set parameters and guidelines. Okay, another financing that's available is commercial real estate financing. Yeah, it's still out there. Okay, and we offer a lot of these, financing through investors, originators, insurance companies. Programs are available for acquisitions, refinance, expansions, renovations. Okay, with real estate financing, you typically get 75 grand to 20 million. Okay, owner-occupied, conventional investment, hard money, bridge loans can be used for industrial, office, manufacturing, mixed-use, auto dealers, daycare centers, assisted living facilities, and more. Let me tell you something people don't know about. Did you know that you could get commercial real estate financing with business credit? Most people don't know that. You could actually use your business credit to qualify for commercial real estate financing. Okay, it's actually, if you've ever heard of a shelf corp, although they are a crap rip-off fraud, the main reason people use those for longevity is to get commercial real estate. Okay, so the bottom line is important to know that when you build your business credit, you can get commercial real estate. What's important about that is it's important to note that pretty much anything you can do with your consumer credit, you could also do with business credit. You could use business credit to get credit cards, to get credit lines, to get loans, to get auto vehicle financing, even to get commercial real estate. The same as you could use consumer financing to get, consumer credit to get credit cards, loans, real estate, auto loans, right? That's what you use your credit for. You can use the credit for the exact same reasons in the business world. So it's just important to know that the building of business credit can help you in these other areas, even including the ability to get commercial real estate. Owner-occupied, finance, general, office, medical, dental, industrial, warehouse, light manufacturing, mixed-use, commercial condo, auto dealers, daycare, schools, assisted living, entertainment, all others inquire. Okay, so most of these are what you're going to see as classified as an owner-occupied property in the commercial real estate world. You can also get investment properties financed. Okay, so you can get retail, office, warehouse, light industrial, self-storage units. So again, I just kind of wanted to show you this because, you hear that they get commercial real estate investment properties and owner-occupied. This gives you some kind of idea of the kind of properties and financing they'll actually do with investment and with owner-occupied commercial real estate financing. Wow, this is big, huge, popular for our clients. You can enjoy a quick closing with rehabilitation loans. Okay, rehab loans are tailored for a real estate investor who wants to make repairs before selling the property. Okay, so using the property as collateral, funds are available for short-term residential renovation projects that most traditional banks and credit unions won't approve. No, they will not. They will not do these kind of programs. Funding for investors to rehab properties up to 65% loan to value of repaired value is typically what they'll go off of. And 6-month loan terms are available. Minimal documentation needing, and they just need some stuff about the property, home inspections, any kind of purchase orders, anything they're doing for the property, 3 months of bank statements. They're looking for money with this house for seller. It comes down to this. I mean, you can get up to 65% of repaired value loan to value, but as you're going to see in the next slide, well, I'll just go to the next slide. You're also going to get, I'll show you in a minute, authorized monies will be held in escrow and released in draws as the contractors complete renovations. You can also get 100% of renovation funds advanced in 1 to 4 draws. So you could actually get 100% of the project cost to do this. It just has to obviously be within the loan to value, which, look, most investors are conscientious of that. They're aware of what the value of the property is going to be. They're very aware of how much money they're putting into the property to make sure they're going to get their return on investment. So they can get up to 100% of the renovation cost, and that's typically delivered in 1 to 4 draws. Okay, kind of similar to a construction loan. If you've ever dealt with a CP or a perm loan, they do the same thing. You do the work, you show them the work is done, they give you more money. You show them that work's done, they give you more money. That's what draws are, and that's how that works. The house for seller financing is brilliant because I'll tell you 20% of our clientele are real estate investors. 20%. 10%. And the funny thing is we don't even target real estate investors. But they just can't get money. Banks won't touch them. Obviously, with the housing market collapsing, banks want to stay as far away from any financing dealing with residential properties as possible. So, you go into these house for seller programs, it's very, very, very beneficial because with the house for seller program, you could get the money to fix up the property, turn around and sell it, which saves a ton of cash flow. And again, somebody can get approved with average credit, 650 credit scores. They just want the person to have money in the bank and an experience in flipping. If the person's got 30 grand or something in the bank, they've got some experience with flipping, which most of these flippers meet that criteria, they're typically able to get approved. Auto vehicle leasing. Okay, vehicles can be leased in a business name. Again, most people don't know that. Auto vehicle leases can be obtained based primarily on business credit. Multiple leases can be obtained. I did it. I got it. I had a Mercedes-Benz on my business credit report. Talk about building business credit. I actually got that. It was years and years ago when I leased a new Mercedes, and I did it through a business. I did it through the business. I went to them and said, look, I want to do this through my business, through my EIN. Now, of course, they look at your personal credit, okay, but my personal credit was good. So I got approved, and it reports to the business credit reporting agencies, helps me build business credit. So a lot of people don't know you could do that you could get auto vehicle financing, leasing exactly in your business name. Now, I just kind of used it as an add-on. I kind of went the opposite way. I used my personal credit first and then just had it added onto my business credit. But at that time, if my business credit was built, again, I, like most people, didn't know a lot about it at the time. Okay, but if your business credit's actually built, then you can easily come in and you can also qualify for auto vehicle leasing here too. Okay, so that is kind of wraps it up. Talking about 16 different programs that you're actually able to get financing through. Actually went through more than 16. A lot of those are very, very powerful products. Merchant advance, revenue lending, bad credit. You can get auto vehicle leasing, a lot of really, really cool things that hopefully you've learned through that. Now, what I'm going to do now is I'm actually going to show you the business finance suite. We have an actual system where all of these are offered. Now, I'm not going to go through this. I don't have time, to be honest with you. I only got about 10 minutes to even go through this. So I'm just going to real briefly show you how with the business finance suite, we have all these finance products in one place. It kind of makes sense for the client. And that was kind of the purpose of the finance suite. What this is for us is it's a turnkey product where you can turn around and offer business credit and financing for your clients. And to simplify it, it's just as simple as this. Our clients wanted a turnkey solution to offer to their customers where the customers could get business credit. The problem we found along the way is although business credit, getting money with no liability is a beautiful, fantastic, amazing thing, people wanted money right away. That was their priority. They loved the idea of business credit, but they wanted money right away. So we created the finance suite. We created the only system of its kind. There's nothing like this on planet Earth. It's the only system that combines business credit building and financing for clients. Every product that I just showed you is in there. Actually, we've got over 30 core funding products, and I showed you 16. So we got a lot more than I even showed you. We've got over 30 core funding products, over 2,000 lenders, and this is why. Look, people need money. They don't know where to go. So what do you do when you need money? You go to your bank. Well, you see banks offer 2 SBA loans, so if you can't go full doc, you're done there. So now where do you go? Well, this was my problem owning a credit repair business. The answer is I didn't know. I didn't know about revenue lending, merchant advances, unsecured credit. I didn't know about any of this. Most people don't. So the problem is most business owners go to their bank, they're denied, and they're done. Well, through the finance suite, what we do is we have them basically come in. They complete an application in step 1 and 2. Okay, and what we do, I'm having some issues with my computer today, so I'm not sure if I'm going to have the same issue, is we walk them through a 20-point checklist. We make sure that they basically meet the lending criteria before they even apply. We help them set up their corporation the right way to limit their liability. We help make sure that they have the right physical business address. We have the same technology checks that a lender uses to approve somebody. So we make sure that somebody meets the lending criteria before they even apply because, come on, I mean, that's common sense, right? It makes sense. Even though banks don't do that, we don't want them to apply and get denied. So we make sure they understand the importance of 411 directories, fax numbers, phone numbers. We walk them through and make sure their entire business is set up credibly, websites, email address, licensing. That's the first thing we do. And actually, the system comes with certified business advisors that do it with your client right on the phone. Okay, so they do it with your client right on the phone. They go through step 1. We make sure their business is set up credibly, and then we get them into step 2. And what we do is we ask him these questions about revenue, about credit card sales, and then we take all this information, we cross-check it against lenders, those 2,000 plus lenders, and render decisions of all the programs they qualify for. It's really brilliant. The technology does what no human can ever do. We take that one customer and we cross-check it against 2,000 lenders to give them all the programs they qualify for, not some. As a matter of fact, the programs you saw, most of our clients get multiple of those. They get unsecured credit cards and revenue lending and merchant advance and equipment financing and wrap financing. They're getting 3, 4, 5, 10 different programs to help them, not just one. So it's really brilliant. When they go to apply, all the data on their application auto-populates to save them tremendous amounts of time. They click submit. It goes to their own finance advisor. Kind of funny. You know, you go from somebody that walked in their bank, couldn't even get money. Now they get in the finance suite. We have to give them their own finance officer to help them understand all the programs they qualify for. All the programs are right down here. They can click on them, get a written description, the audio description, and apply. And the application goes right to their finance officer. Their finance officer helps them pick the right programs, rates, terms, those type of things, go through and secure their money. As a matter of fact, our average client secures money in the first 30 days, and in a lot of cases, it's over 50 grand. Then we help them through the process of building business credit. Okay, we help them get access to the business credit reports. This is the only system on the planet where we can actually get them free Experian smart business data for free. They don't pay for it. Experian doesn't offer that anywhere else, only through our system. So they can enter some data here and populate how many trade lines they have, all the pertinent data through Experian. Okay, they can even get a free DUNS number right through our system. Okay, so we save them over $1,000 worth of stuff from the credit bureaus just by getting that stuff set up right through the finance suite. And then on top of that, after we access and get them access to the credit reports, then we help them build business credit. It's brilliant. You know, so in step 4, we help them get approved for vendors that will report. These are companies that will pretty much approve anybody. Help them get 5 trade lines on their business credit report. Okay, we have this, again, more sources than anywhere else in the world. Okay, plus this is the only place where we actually tell them the underwriting guidelines. So on top of the client going out and applying and getting denied, you or people you probably known have applied for business credit, got denied, you were stuck, you didn't know what to do, right? Well, it's because you didn't know this. You didn't know what their guidelines were. How easy is it to get approved when you got 50 sources? You only need 5, and then we give you the underwriting guidelines for every one. And everyone on this first page alone will approve a brand new business. A lot more of them will too. So we tell you what they sell, who they report to, and even the underwriting guidelines. So you can come in and say, okay, you know, this is what they sell. Okay, this company is willing to work with almost any business at getting approved and setting up reasonable payment terms. They will not pull your personal credit and will not require a personal guarantee. You just need to be listed with 411 and have an EIN. Okay, so we make it so easy, and again, we've got over 50 sources here that clients can apply for, and they only need 5. Okay, we've got over 50 here. More sources available than anywhere else, and all of them have that. Plus, the brilliance is that once they pick their sources and go back to their dashboard, right here, they can click sign up online, go online, and again, all that data auto-populates. I mean, look, we're business owners. We get it. They need to save time. So we're going to save them time. Once they enter the data once, and again, that data is entered with their advisor on the phone, then it auto-populates on all their applications. Okay, then once they do that in 60, 90 days, they've got their business credit built. Then it's just a matter of coming in and getting them revolving credit. So in step 5, we get them revolving credit. Staples, Office Depot, Shell, most of this is available with no personal guarantee. Okay, Walmart, Costco, they can come in and get approved for all this business credit. Amazon, Dell, 10,000 at Dell. And again, we tell the underwriting requirements, who they report to, all the specifics so the client knows that they can get approved. Lowe's, Sears, BP, Chevron, Speedway, and on and on and on. Sam's Club, Visa, MasterCard, 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 MasterCard. Okay, so then they just come in there and just start getting money. And that's what the clients do in our system in step 5. Okay, then in step 6, we bring them back to funding because now that they built their business credit, they can get a lot of this with no personal guarantee. Okay, so that's our actual business finance suite. Now you can see we offered all of the client in one turnkey system. With our system, you just sell it, you get out, and you're done. Everything else is basically done for you, which just makes it absolutely phenomenal because it's all done for you. And again, you know, you're talking about our clients are selling it for $2,500 to $3,500. You pay only $700 per every system you activate. We pay the advisors. We pay everything. So our clients are earning $2 to $3 grand in profit per sale, and we give you all the marketing materials that you need to sell it. 6 months email content, social media content, done for you webinars, videos, press releases, articles, free reports, ebooks, done for you seminars, done for you training for your sales team, websites. It's all done for you. Okay, so if you all want more information on actually getting started, you can go to businesscreditexpert.com. Okay, and businesscreditexpert.com will give you all the information about getting started. Now, I don't have time for questions today. I'm actually jumping into another webinar that I'm starting in 5 minutes. So if you do have questions, and I know some people do have some questions in the chat box, just do me a favor, send me an email. Ty@DisputeSuite.com, ty@DisputeSuite.com. Here's my phone number, 877-600-2487. If you have any questions about business credit, about financing, about getting financing, please give me a call. All right, thank you so much, everybody. I appreciate you taking the time to attend this webinar. Also, before I do go, though, I do want to tell you about a special that we've got going on. Right now, we're actually going to offer you a special with the business credit. If you go to businesscreditexpert.com, you're able to get the top plan, the premier plan, for an $800 discount. So when you're on the businesscreditexpert.com, look at the top plan and know that through Sunday, you're going to get that top plan for the middle plan price. It saves you $800 through Sunday. Unbelievable. And remember, you're making $2 to $3 grand in profit per sale. So even one sale pays your cost for enrollment. Plus, you could break these down into payments of $400. It's easy. You only pay $400 to get started. And I didn't mention, you get your own finance suite for your business. So on top of all the marketing, all the training, becoming a reseller, you also get your own finance suite for your business. Plus, we're going to give you a ready-to-publish book on personal and business credit, full access to all business credit weekly coaching webinars, 3 months of email content for credit repair, social media content for credit repair, free credit reports, a credit repair kit, all of that to help market credit repair if you're in the credit repair business also. All of that if you're actually getting started. I said March 3rd, but it's actually through this Sunday, which is this Sunday, which is March 17th. So visit businesscreditexpert.com. A lot of great information. Again, even if you're not using our finance suite, now you're at least exposed to the multitudes of different financing that's available for clients out there. So look into some of those options, because if you can help your clients with business credit financing, you're going to create a massive income stream for your business. Again, if you use our finance suite, that's great. It just makes it easy for you. It's all done for you. There's no back end to manage. And again, if you want more interest on that or more information on that, visit businesscreditexpert.com, send me an email, or give me a call with questions. Thank you, everybody, so much for taking the time to attend this webinar. Hope you all have a great day. Thanks, everybody.